What's going on, guys? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined as always for our week ahead podcast by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. Stu, how you doing?
I'm doing fantastic. It's going to be a very fun week.
It's going to be a wild week. We're coming to you from an undisclosed location here in Denver, Colorado, here on this gorgeous July 20th. If you're listening to this, it's July 20th or beyond. We are actually recording this. I'm about 6:30 Mountain Standard Time here for before that. So markets are open. Oil currently trading about 40.70. So we'll keep you updated with that throughout the show here. But yeah, we have a great show for you guys lined up. I mean, really, quarter two earnings are going to start in earnest tomorrow or today if you're listening to this. So I think actually Halliburton will come out today. So we're going to do a little Q2 earnings review / predictions. We're going to check in with the levels as always for crude oil, see what the price action looks like. We'll look at the commitment of traders. I'm sorry, the 360 fund is still suspended. I know we said we have some stuff to you, but we had a lot of good stuff going on this week. I built some dashboards. We're rolling out some really cool stuff. So the fund is still in suspension, but I may get into think about it. But guys, this show is brought to us by Adamantine Energy, who are really becoming game changers for what's called social risk in the energy sector. And you might be asking yourself, well, what is that? It's not just community opposition to all of your development projects. It's everything from the success of the divest from fossil fuels movement to all of this investor engagement that's going around in your specific ESG programs to individual states. We just ran, Boulder counties threatening, you can't drill in Boulder because some bureaucrats won't let you. All of these individual, counties and states setting these ambitious goals and, decarbonization agendas that absolutely kill you. It really, sometimes it seems like social risk is everywhere and it's multiplying like zombies. And that's why your company needs a strategic partner like Adamantine Energy to help you assist and deliver all of the shareholder institutional pressure on your peer companies, aspirational regulatory changes, driving energy policy, perception of where you are, anti-gas climate, and so much more. Guys, I'd highly check them out. www.energythinks.com. The CEO, Tisha Schuler, not only is she just a tremendous person, is also the host of probably the best oil and gas thought leadership podcast. It's out there. It's called the Energy Thinks Podcast. She has some heavy hitters. Not to admit, next week you can hear me on the podcast, so I'm slightly biased. She's interviewed great people. Paula Glover, CEO of the American Association of Blacks in Energy. We've heard from people from the Natural Gas Institute. You've heard from Michelle De La Vigva, who runs the ESG for Goldman Sachs. It's a $300 billion fund that this guy runs. It was an awesome to be able to bring him. I highly check that out wherever you get your podcast. You should also subscribe to this podcast, the the 360 Digital Closing Bell, iTunes, Spotify, YouTube, the best place for all of your energy, finance, market stuff. Guys, we come to you live 2:00 Mountain Standard Time every day on YouTube, covering the energy markets. 10 minutes, you get to hear what happened. Top stories. You get to hear energy equities. You get to hear the banks' rankings, all their trading revenue. Guys, we bring you the top stories. We appreciate everybody who's in. You can also view that show every day on the world's greatest website, oilandgas360.com, or via the Closing Bell, which you should sign up for, which is probably the best email you should be getting in your inbox. Gives you all the top stories and all of the pricing on top of the 360 Digital Closing Bell. You should also follow Oil and Gas 360 on all of the social platforms, YouTube, Twitter, all of them. We're tweeting away. We're tweeting like a storm. Connect with me and Stu on LinkedIn. You should also check out Entercom's Energy 360 podcast, which is the best place for overall financial oil and gas thought leadership. Me and Stu. Stu runs that podcast. Who do you got coming up this week?
Well, this week we have a wonderful interview with Heidi and Terry and you and I.
Heidi McCullough, who, if you're familiar with that podcast, me and Stu had the opportunity to interview a couple weeks ago. Canadian oil and gas advocates, which is far and few between, I guess. Our friends up north. Great conversation. I'm not sure if it'll be the most viewed, but it was the funnest I've had, no doubt. It's 200%.
They are wonderful people. Wonderful. We love our neighbors.
Oh, we love it. So it's a great interview. What do you got coming up Tuesday?
We've got Brad from Enverus. He is the director for the Enverus product that's an add-on for all of the spacing in Oklahoma. Phenomenal database information. He's been working on this for 30 years.
Well, Oklahoma is notoriously horrible data. Trust me. Everyone's got their side projects they're working on. Trust me, I have dealt multiple times with the Oklahoma oil and gas database. Brutal. So anything that helps with that is going to be awesome. I haven't even seen that interview, so I'm excited to cut this up and sort of glean some insights.
And they're going to be presenting at the Oil and Gas Investors Conference. So very cool.
Oh, yeah. Now you sign up, check that out, theoilandgasconference.com. You're not going to want to miss that sign up August 17th through the 19th. And you have something coming out Wednesday. It's a packed week for your podcast.
Yes. We also have crackers.
TGS.
Yes, TGS. It was an outstanding one we had, and it was really good because they are the world's largest data warehouse for seismic material.
Yeah.
And unbelievable interview. It was a blast.
Yeah, I mean, these guys really are just on the, I don't want to say cutting edge, but they are on the cutting edge. I guess what I would say, what they specialize in is it's not data, but it's the acquisition and total view angle of the data. They're not necessarily building. Now they have products, but that's not necessary. It's just a fascinating interview, guys. Check out TGS. If you're trying to do anything with data, call them up first.
And 3D and 4D. One of the things that was
the
really
seismic stuff. That's really where their niche is the seismic stuff, which is nobody else is in their ballpark when it comes to seismic.
And one of the cool things is we were talking, and they have a new data set up in Prudhoe Bay on the North Slope. That new slope, that new data set is coming back to life. My granddad was one of the ones that founded the North Slope for Sinclair. And I've got a history. He was one of the first geologists that said there's oil there. So
really,
I like Alaska.
You know, gotta love some Alaska. Well, that's awesome. Excuse me, that's awesome. So no, it was fascinating interview, guys. Highly check that out. Energy 360 podcast, wherever you get your podcast, iTunes, Spotify, and you can check it out on the world's greatest website, oilandgas360.com. I mean, as we get into this week, it's the biggest story is quarter two earnings are rolling out. We've been joking for 2 weeks. We're about to be busy, and we are now about officially to be busy because as we look at the quarter two earnings calendar, Halliburton's going to release tomorrow 9 a.m. So we're going to know whether or not they're going to be down and. They're going to have lost some money. Baker Hughes is going to come out going to come out Wednesday. Schlumberger will be Friday. So we're going to have Oilfield Service, kind of the three big players this week. And then we're going to see a lot of the gas players roll out. Shale, a lot of the shale oil companies are going to be a little farther down when we get a couple weeks from now. Liberty Oilfield Services, another service company, they'll be July 29th, so roll out a week from now. You can view this oil and gas calendar up on the Oil and Gas 360 News Desk. We'll get this nice PDF download for you so you can take a look coming up. So I thought it was helpful, for me, what I always like to do before earnings season is, okay, let's look back and take a look at what happened in the previous earnings season. What were some of the stories that people thought were going to be coming forward to quarter two, and what actually do we think are going to roll out? Because I think it's important, I think, because history tends to repeat itself, and it's sometimes very interesting to see what these people, what they think about and sort of how that drives stuff. And, for reference, quarter two is going to run Wednesday, April 1st, 2020 to Tuesday, June 30th, 2020. So, I mean, it sort of makes sense. There's 12 months in a year. A quarter comprises of 3 months. So I'm not trying to say anything too fancy, but it was a Wednesday through a Tuesday, and what we're catching in. I mean, the biggest thing you got to start with is what the price of oil is. And that's really, I think, the biggest quarter. So I'm going to link this chart to my here in the show notes. So go ahead. If you're listening to this on iTunes, just go ahead. You can click the link and pull up my chart. And I just threw up a comparison of here's quarter one prices to quarter two. And by first glance, it's the easiest thing to tell in the world, Stu. Quarter two prices were extremely low because guess what happened? For the first time, we saw negative pricing that came into effect. We all know that happened at the end of April due to some of that crude oil Cushing stock. But, I mean, really, when we saw, the quarter started at $20, went up to 28, dove all the way down to negative $7 billion, rose back up, and then slowly sort of chunked its way back up. I mean, we saw price action from really price action from end of April, beginning of May onward has been fairly bullish. We started, to make a coronavirus joke, started to flatten the curve a little bit. We've been sort of peter out and kind of hit that ceiling at $40. But we've continued to see price action up, and so that's good. The problem is you're seeing more than 50, about 75% of the quarter oil prices were at or below $35, which means one thing: oil revenues, which are the big driver for a lot of these companies, are going to be down, specifically on the E&P side. Now, on the service company side, it's going to get even worse because companies are not only, Halliburton's not drilling, no one's drilling any wells. We have Patterson UTIs comes out, who's an onshore drilling company. They come out on Wednesday. It ain't going to be good. Yeah, their quarter one wasn't good. Quarter two ain't going to be much better because no one's renewing drilling contract. Maybe people are renewing drilling contracts right now. They're going to take into effect starting in quarter three, which is already 19 days into effect. So, but not quarter two. No one was re-up drilling plans in quarter two. Offshore drilling, you might see, you may not see it as much, but yeah, precision drilling, Wednesday, June 20th, or July 23rd. So that's a Wednesday. They're dropping a tube here. It ain't going to be pretty. So Halliburton, it's still not going to be good. When you look at, they're expected to lose $5 billion. That's the consensus, down 34% from a year ago, which was, what's a couple billion between friends? So yes, recently, as for people who follow the closing bell on sort of a day-to-day basis, the price action has been up. We flattened a little bit. We're around $40, but that's not what the majority of the month was. So oil revenues are going to be down. CapEx clearly was being slashed in quarter one. And this is something that's interesting. When we look back at quarter one, what were some of the top three themes? And there's a lot of different ways you can figure out what the themes were. You can go, there's so many different ways you can figure out what's the theme of quarter two. You can just look at the top stories. You can go, articles. I think there's some interesting. I love to go look and get a consensus of what were the analysts thinking. What was their top themes? Because what an analyst who writes a research report that gets produced at Goldman Sachs, what their energy equities strategist thinks, that's going to move market. That's going to move the institutional money. That's really going to turn these companies around. Biggest themes. Financial questions, Stu. They were most concerned with the with the financial outlook of all of these companies. Over 90% of the questions, Stu, were tailored to their financial outlook, and specifically the credit ratings. I've sat in on, my fair share of earnings calls. No one talks credit ratings. This is the first time I heard questions on credit ratings, which is crazy to think about.
Wow. That's like some of the cities that are going bankrupt.
And I know what you might be thinking. Well, you're telling me no one asked about the credit rating, and you got to remember, guys. These equities research analysts, they're homeboys with these companies. They are homeboys. It's a tap dance that these guys play. They want access. Who's going to give them access if they're writing negative reporting? Now, there's a way to do truthful negative reporting, but it's a tap dance these guys do. Think about sports reporting. Why do you think LeBron James only talks to one sports reporter? Well, I don't know. He gives them good coverage. It's the same thing happens everywhere. So, you're going to get a lot more favorable coverage. But when I'm seeing over 80% of the questions being tailored toward the financial strength of the company and talking about credit ratings, that's a sign that these analysts have turned and that these reports are, and I'm seeing them. I'm getting these reports that they're turning south. The second was their strategic questions, which is interesting. Usually it goes production, or usually it goes operational, financial, strategic. We see financial, strategic, operational that happens right now, which is very interesting to kind of talk to you about where these guys' minds are. They don't really care about what you're doing with production cuts, what you're doing with drilling rates. It's financial, and which is interesting because I think a lot of, if you would have asked me what's the biggest theme of quarter two, I just said production cuts. Not according to what these analysts really care about. So that's very interesting, specifically when we're looking at what earnings are going to do to the energy equities, and that's the difference. Yes, I think in the oil patch, the stories have been a little different. I think bankruptcies have been the biggest story. Haynes and Boone just came out with a report last week. 24 companies in quarter two declared bankruptcy. 24. That's a huge number.
Yes, and in our interview with Andrew from Inveris, he had said Q1, and I got to go look at my notes in that one, but he said in Q4 it was normal quarter, let's say just $4 billion in mergers and acquisition, Q1 was less than a billion, way less than a billion. Unbelievable small amount of M&A, meaning a lot of people can't offload their assets because there's no buyers. So in Q2, they were not able to fix their financials by offloading assets.
Yeah, and it's going to be interesting because as we get as the kind of the clear theme from quarter one wrap up, when you look at what the outlook from quarter one to quarter two is, it's going to be worse. And I think the phrase is prep for disaster. I mean, we as we rolled out in this quarter, we saw Shell coming out and saying they expect to write off between 15 and 22 billion. I mean, truly, what is a couple billion between friends, Stu? I mean, that's an eight. I'm not a mathematician here, but that's a $7 billion range that they could write off. Unbelievable.
So you say the number one thing you're seeing for coming up into this whole Q2 is write downs. Is that what you're saying?
I'm just saying I think that the mood is prep for disaster. I don't think anybody's going to have anything positive coming out of this. Like I said, Shell's down 15 bills. Already they've announced they're going to do it. Exxon's come out and said they're going to write down $2 billion. Rystad came out with an energy report that said the entire quarter two write-downs will total around $300 billion, which is the most that's ever happened. So, yeah, I mean, I think write-downs are the key, but I just think it's going to be disaster as a whole. I mean, Halliburton's expected to announce $5.4 billion in consensus revenue, which is down 34% from year to go and down 20% from last quarter. Schlumberger is expected to write down 42%, down $3.3 billion. So I mean, the numbers don't look good for estimates because when you just factor in what that time frame was, oil price was way worse during that during that time frame.
Having any kind of royalties or any kind of asset sales is a savior for some of these folks, and it didn't happen.
No, man, it did. No, it really didn't happen. So, as far as a prediction, is what I think. If I gave one prediction, it's not going to be terribly spicy. But I do think some of these pure gas players, specifically Goodrich, Intero, Cabot, Range. I mean, we give the list. You know who these gas players are. I don't necessarily think that the numbers are going to be very good. Natural gas is trading $1.69 right now. Like the numbers aren't good per se, but I think the outlook coming out of it is going to be very well, and I think you're going to see those stocks rise. I think investors are going to be, especially with Warren Buffett and Berkshire Hathaway coming in and entering that midstream / gas space. I think you're going to see the sentiment from some of these earnings calls around these pure gas players to be positive. I think you're going to see stocks rise. So, if you're gonna do an options day, if you're gonna do some earnings day options, I'm probably long Goodrich, Intero, Cabot, Range. But again, that's just now you're talking predictions here. At some point, you'll never know the answer. Stu, you got any predictions? Quarter two earnings?
I do, and I think you nailed it. Absolutely nailed it right on the nose with what you just said as far as it's going to be abysmal. I think the write down, you're dead on right with the write downs. But I think we saw, what was the report, estimated 20 bankruptcies?
Haynes and Boone, we got to give a shout out. We love our friends over at Haynes and Boone. 24 bankruptcies quarter two. Woof, woof.
You're going to see a lot more than that, and so.
Well, that's just public. You don't mean that? No, that's not a private number because private is different-ish.
Right. I'm going to say right now, if it's a reset for the majors, and we're totally writing everything off, trying to salvage Q3 right now. We're not seeing a demand increase.
Yeah.
We're still 90% dead on airline travel. 10%. I've got family facing layoffs in the air industry. Demand will not save the $40 price. I think it will be below the 30. Back into that 30 range.
No, I agree. Well, I mean, we'll get into what I think oil price is going to do here in a little bit.
But I think the natural gas in Q2, those players are going to do okay.
But I only think it's because the sentiment is going to be well. I don't think you're going to see crazy revenue numbers or just crazy, I don't think you're going to see anything crazy. I don't think Intero's pulling profits necessarily this quarter, but I think they're going to be set up, which is exactly what these investors are looking for and exactly what these analysts are looking for post. So I think you're going to see their stock do okay. That's what I'm telling. I'm not. Don't. Trust me. You don't need to pin me on the nose here for trying to tell me that you think. You think Goodrich is. We love Goodrich, but I don't think they're necessarily going to have the revenue's not going to increase next quarter. That's not a hot take. That's just. But my question is, I think investors are going to be bullish on their outlook, and I think you're going to see their stock price rise. And I think it's a earnings day option. I'm long.
I would agree, and I think the only real goodness happening is the exports for LNG. Those contracts are coming due, and they are looking good for our LNG folks exporting.
No, LNG is going to be good. So I think that covers quarter two, guys. It's not going to be pretty. We're going to be covering the obviously the fallout on a day-to-day basis, but we felt this best just to sort of prep you guys. I mean, that's what they say in hostage negotiation. I'm delivering bad news, and then boom, you give the news. So it's going to be bad. Boom, here's why. So talk about that. Anything else, Stu, about quarter two earnings?
Buckle up.
Oh, it's going to be a long ride, and I think it's time. Let's go ahead and just shift into oil trading, what we see for the oil patch this week, guys. As always, this segment is sponsored by Sandstone Capital Group. These guys do insanely good research. They provide all of the levels from the Energy Glimpse solution. Check them out, guys. SandstoneCG.com. Call them 949-561-1818. Tell them the podcast sent you. They're great guys. They help you out regardless, but if you don't tell them the podcast sent you, we do not get credit. Things I'm watching for in the U.S. shale business this week, earnings, LOL. We just covered it. Obviously, the oilfield services earnings are coming up, so I think that's going to be specifically this week what we're watching for. Service companies are going to get absolutely pounded. We saw $5 billion revenue, which is 30% down for Halliburton, 3.3 for Schlumberger, which is going to be absolutely terrible. It'll be interesting to see the difference between their international games, though. Schlumberger might turn a profit internationally, but is definitely not going to turn a profit on the U.S. So that's definitely something I'll be watching for on Wednesday. But really tomorrow, we'll see what Halliburton rolls out. I think the other thing is obviously coronavirus is still something that we need to be concerned about. I think oil has actually held up fairly well considering some of the sentiment around the actual virus isn't going well. But I also think that the lockdown isn't imminent. I think people saw the first time that the lockdown probably didn't. I don't know. I'm not a doctor, but I'd be shocked if we actually go back to where we were, which was that little like a 2-week quarantine. I don't think that's going to happen, even if they flip that. So I don't think you're going to see a huge dip in oil because of that, and that's why I think you're seeing oil sort of hold steady around that $40. To answer your question, Stu, you brought up what you think oil price is going to be going forward. Do you think we'll see 30 again? Do you think we see an oil price that starts with the number 30?
Yeah, we will be in the 30s.
How soon? This is time. Put your stamp to it. Kreskin it for me.
35 next week.
Woof, 35 next week. Off. $5 drop?
You bet.
Ooh, okay. Off. Why?
Part of it is going to be the information from earnings. You're going to see OPEC in that report I've been going through. There's some announcements coming out next week from OPEC, and so you're going to see some of that coming around.
Okay. Well, you very well might. And $35. So you guys heard it here first.
We got it recorded, so we're going to have to. I may be wrong. The Kreskin may be wrong.
Oh, that's all right. So you brought this up right before we actually decided to record this, and that was, we're going to have to start caring about politics again.
Yep.
I know that's the last thing we really want to chat about is politics, but last week, Joe Biden released a climate plan that over $2 trillion in spending and really called for net carbon emissions by 2050. What a great way. Stu, I pledge to be skinny by 2050. I pledge to have a six-pack by 2050. So I'm right along line with Joe Biden here. I have no problem. I will succeed that. The former vice president came out with a plan, $2 trillion with plans to deploy those resources at an accelerated pace during the first term. In a statement, Trump's reelection campaign said the Biden's proposal would destroy jobs, and the former vice president is also drastically underreporting the cost of such a plan. But to do that, but the plan would achieve to make carbon-free power by 2035, but also upgrade 4 million buildings and weatherize 2 million homes over 4 years to increase energy efficiency. And the proposal, according to a Biden campaign official, would seek to shift major cities toward public transportation and create millions of good union jobs, rebuilding America's crumbling infrastructure, which I can be down with the infrastructure stuff, Stu. I have no problem putting America back to work, fixing our roads, bridges. That's something I am willing to get taxed for and pay for. But the rest of this stuff, all I have to say, woof. Woof indeed.
That's a double woof, man. Give me another woof. That's horrible.
Woof, woof.
Yeah, the one thing about that plan is right when he was announcing it, he said the world's going to end in 9 years. So if we're going to wait for 9 years, we're in 20.
I won't have abs yet because it's by 2050. I won't have abs yet. The world will never see my abs.
If I can't remember anything, I can remember math, and that's 2029. But yet so the financial numbers are not adding up.
Yeah.
The other thing is all in the COVID responsibility or the COVID funding that everybody says they're trying to inject money into the economy is being tied to 100% renewables.
Yep.
Big projects. I would rather see it go to, the infrastructure rather than.
Yeah, exactly. And we have beat renewables in the head enough on this podcast. We don't need to do it. You guys know where we stand. I'm skeptical. We're skeptical of a lot of this difference. I'm skeptical of a lot of this stuff, especially Biden's plan for the energy industry. That just sounds fun. That just sounds like an oxymoron in and of itself. Stu, you've got one story in the international news desk.
Yeah.
What's it?
When we were sitting here just a second ago, sustainability, and you sit back and take a look at ESG is again being tied to all of the finance. Doesn't matter what you're trying to finance in the international market right now, ESG, and it is getting to the point where, but tying this back to COVID release, finance, and ESG, it is gonna get nutty out there, and I have the article out there on the news desk.
Yeah, I mean, nuclear is going to be huge. If you hadn't had a chance to listen to our Alex Epstein interview, I'd highly recommend go checking out, because he's not only an advocate for an education around the energy business as a whole, but also he's a big advocate for nuclear and nuclear power generation, which is different.
Then we are this close to the next generation of nuclear reactors.
Yep.
And I really believe that will, you can't put a battery on a plane. You're still going to need that.
I barely want to get on a plane now. I will not get on a plane with a couple 12-volt batteries in it. Woof.
I got a AA battery here, man. We're going down. We got a AA battery.
We gotta switch out. Oh, we're using D's this time.
Oh, okay. No, but anyway, you take a look at nuclear. We're on the edge, and there is now a global race to try to match nuclear to help backfill wind and solar. And wind doesn't work up in the Northeast. Wind works in the plains. So you're backfilling. They're trying to save their bahunkas by backfilling with nuclear.
No, it'll be interesting to see where nuclear goes. I think it's something to follow. Move on. We look at the levels here for oil. It looks good. I mean, I'm going to move the floor up 39.09. So last week our floor was 38.18. Whoop! Get out of there. 39.09, new floor, touch twice. Then we had a really nice rebound late here in the week. I think 39.41 is probably your next level down. If you're looking to get long, that's a great spot. 40.17, 40.48, 40.72, 40.81. There's your point of control for the week. So that's a whoo. That's a good number to see right there. Ceiling's probably around 41.30, 41.35, but will be very interesting. You can check out all of the levels via the news desk I'll be sending, and we'll be updating this tomorrow morning with the new embed code. Crude commitment to traders, very interesting as it rolls out this week. Managed money managed money dropped long contracts about 15,000 or about 1,500, excuse me. Dropped a couple short positions though. So very interesting. A lot of shorts added on the long side for swaps or for on the short side for swaps though. So that's indicative of people are diving in doing some hedging right there. So there's a lot of activity. Our friends over at Aegis Energy are busy. I bet you they represent a lot of that getting floated around right there. I don't see anything terribly interesting. I think managed money is sort of staying long right now when oil is staying long on oil. I think they don't necessarily think it's going to drop below $39. I think they're bullish on oil, which will be interesting is what that sentiment looks like as these earnings begin to roll out and we watch. So as we know, we're a couple of days behind with the traders, what those big institutions do, but we will look at that. Guys, I mean, our 360 fund is still offended or is still suspended, but the lawyers still make us say this so we don't get sued. This segment was always intended for entertainment purposes only. Everybody on the show, i.e. me, Michael Tanner, and Stu Stewart, Trillion Invest for our own account. Do not manage any outside money. Do not give investment advice. Do not offer any securities. Have any involvement in the regulated side of the industry. Investing is risky, and you can and will lose your entire principal. I was just lazy this weekend, Stu. We had other stuff to do. We were supposed to roll out a new portfolio. It didn't happen. I apologize. We just take the blame. I'm taking it up front.
We both are. We've been working our carcasses off, or as we say in the South or Texas, carcass.
It's going to be great. As I look up at the clock here, guys, we're just a little over 30 minutes here, so I think it's a perfect time. Get you out of here. Let you guys get back to work. It's going to be a crazy week, guys. Please check us out on the live show every day at 2 o'clock to stay updated on everything with the energy financing. But, guys, we're going to let you get back to work. Thank you for checking out 360 Digital Closing Bell. We will see you guys this afternoon for the digital ticker.